Welcome to Thursday Night Stock Charts Live. We're going to talk about Cloudflare earnings. We're going to talk about Square earnings. Block earnings. Apologize. And we're going to talk about Twilio earnings. We'll go to those charts in a moment, the after hours price action. We'll talk to you about how we traded those positions on earnings and how we are doing or how we plan on doing tomorrow. We're going to talk about the economic data that is coming out tomorrow. That is the non-farm payrolls, the pimp Mac daddy of them all, along with average hourly earnings. Very, very important data. We're going to talk about economic data. How is it showing up this week? Is it bullish or bearish for equities? And we're going to also talk about the weekly charts and how we are poised to close out this week. But as I always like to say, one trading day left to go, right? Anything could happen. What may be bullish tonight could be bearish tomorrow by the end of business. So we keep an open mind and we trade according to the data. And usually bad news is good news of late. So I don't expect that to change anytime soon. Why? Because bad news means that the Federal Reserve can't do much more, no matter what they have to say on these press conferences and these speaking engagements that the Federal banksters, they speak, like Mester did this week, along with Bullard, intra-week on news programs, wherever they speak. We're going to also talk about newspeak, and this is an Orwellian concept. It's from the book 1984, which is why you're seeing 1984 in front of you. Probably some of you that are of a left-wing agenda, you're not going to like it. You're not going to like what I have to say. Guaranteed I'm going to lose 2 subscribers here due to the fact that I'm even talking about this. It's just the way it is, but I don't let subscriber growth counter what my thinking is, because it matters. It truly matters. We've heard the definition of woman be redefined. Now you're seeing it happen in the financial markets. So, we could survive a social upheaval, a change in a definition. It could always go back. But when you have intellectual dishonesty in the way you define what a recession is, that's a problem. And it really speaks to the desperation of the management of this country. They're supposed to represent us, but they really only represent themselves and their special interest groups. So I want to take a moment. I want to I want to play a video about Newspeak. It's very, very brief, but it'll give you the feel of where we're at in this current environment. It'll allow people to populate, come in while we get educated on what Newspeak is. Immediately following, we're going to go to comments. We're going to say hello to people. So let's get to it while I take a sip of water and get ready for an awesome evening. And we're going to stick around, folks. If you're just joining in, we're going to be doing chart requests later on. So stick around to the very end. Let's get to it. Okay. So you go back through this. This is so accurate. The unperson, basically what it is the cancellation. It's cancel culture. So it's really amazing how George Orwell has captured our current environment in a book written back in the 1960s. So let's get back to Newspeak. So the reason why I'm bringing this up, and making it the lead of tonight's show is that you go to Wikipedia, which is a left-wing rag. If you use this for any type of research, you're crazy. But they've just recently changed the definition of recession. And it's talk about intellectual dishonesty. Although the definition of recession varies between different countries and scholars, not really. 2 consecutive quarters of decline in a country's real gross domestic product is commonly used. No, it's always used as a practical definition of a recession. In the United States, a recession is defined by the National Bureau of Economic Research. I don't even know who these people are. As a significant decline in economic activity spread across a market lasting more than a few months, normally visible in GDP, and then the real income, employment, and this is where they get you because employment is still relatively low as measured by non-farm payrolls. So this is duck speak, right? Whatever that was before. What is it? Duck speak? Yeah, duck speak. This is duck speak. This is nonsense. It's 2 back-to-back quarters of negative GDP. End of statement. End of statement. They want to drag employment in because that muddies up the water. Now, the only reason why I'm bringing this up, I expect this of the politicians. I have a very, very low regard for them. But when you talk about the Federal Reserve, clearly the most powerful institution in the United States and probably more powerful than the White House at this point, you have Cleveland's Fed's governor, that's what I meant to say before, Loretta Mester, warning that there is a need to raise interest rates more to ease demand and reiterating she does not believe, she does not see any recession or weakness that would threaten the Fed pivot. She does not see any recession. I'm sorry, folks. She said this today, I believe. Yeah, today. We had GDP confirming the second quarter of negative GDP. That came out last Thursday. It's a recession. Yet, a voting member, I think she's a voting member, of the Federal Reserve does not see a recession. She's buying into newspeak. And it doesn't end there. Fast forward to Tuesday. This is James Bullard. The economy can still avoid recession. Remember, last week we got the second quarter negative GDP. That's a recession. End of statement. There's no further conversation to be had here. It's always been that way. But even so we have 2 voting members of the Federal Reserve saying that they don't see a recession. Talk about intellectual dishonesty. And this is one of the reasons why I get so worried about this market. What I want to talk about later on is, if we have time, I want to talk to you about our strategy for putting a safety net underneath our portfolio. Short term, I think this market is going to melt up further because of nonsense like this and for other reasons. But I'm going to show you a chart at the very end of this series of pages that we're going to go over as to why we need to start getting a little bit nervous about September. I'll explain more in a moment. So, bad news is good news. We rallied today despite the fact that initial jobless claims, let's stop here for a second. Let's stop, say hello. I've gone way too long. Franklin, brother. Clark, oh, nice background. Thank you. All right, Bob, I'm looking forward to tonight's episode. Seymour Rivers, thank you for being here. Trader Isaac. Hello, brother. Clark, why change the laws when you could change the language? Bingo. Louis, hi, Bob, Franklin, Clark, Seymour, Trader Isaac, and everyone else. Yes, Awesome. Falcon, hey, Bob, will you be speaking about Carvana still in incense 20? I could talk about it. I don't like it. I know it spiked this week. Uh, I would suggest you go over to Lucky Lopez on YouTube. Check out his most recent video. There's going to be there's a big bubble in the used car market, and you can see it in the share price of Carvana. We'll go over it though. Remind me if I don't go over it. Clark, 1984 was absolutely great Van Halen album. Absolutely. Chuck, good evening to you. Picture quality good. Both screens. I don't know. I don't know. I really didn't do anything. I think it was just a bad stream. That's my guess. I didn't change anything. LABU Nugget Boyle B Boyle or Boyle and MOS. Please, Bob. You got it, Lewis. Did you see Daly's comments on inflation on Twitter Spaces? No, I did not. She's completely disconnected and she no longer feels inflation. Oh, I did see that. Yes, I did see that. She's out of San Francisco, right? Well, that makes sense. So, yeah, I did see that. She's carrying the water for the administration. That's all. They all are. They all are. She makes roughly 9K a week. Crazy. Can we take a look at gold? Yes, we can. We're going to be making the case for gold today. Devin, hello, sir. Pete, hello. Denny, hello. Jim, Tessie, yeah, Jim, you got it. Lewis Boyle, Pete, NEM. NEM reported they did not have good numbers. They had bad numbers. I think you brought them up last time, Pete. So credit to you. Yeah, we'll go over NEM. Last I looked, the implied volatility on NEM was very, very high. So we may put on a trade there. It's probably bounced back. I haven't looked at it since I think Monday. I think we talked about it on Sunday night. All right, initial jobless claims rolled in higher today. Bad news is good news. Stocks went up higher. All right, so threats to the market. Don't look now, but China just locked down 1 million yuan residents again. These lockdowns are, I'm convinced, they're meant by the Chinese to disrupt the supply chain and to really mess us up. So this is not going to be helpful. I wanted to put on a trade in the EDC. It's an emerging market leveraged ETF. I backed off, even though the chart looks really, really rock solid. I'll go over it later on if I have time. I'm worried about that ETF because China makes up 30% of it. And I don't want what happened to Russian stocks to happen to Chinese stocks. That'll be a big haircut very, very quickly. So I'm worried. So another threat. This Hong Kong deal, I don't know why we did it. I don't know what we gained from it, but we have a White House orders U.S. carrier strike group to stay near Taiwan longer than planned, says China. You have the Chinese, they think they flew like 100 jets into Taiwanese airspace. They launched ballistic missiles over Taiwan, a lot of them. And this is what they're setting up for the midterms. Now, I'm not going to go into who is affected by monkeypox, but it's a small, defined group, and it's directly caused like 85% by a certain action. We're Facebook friendly, we're family friendly. I don't want to say the group because I have no problem with that group. But what they're going to do is they are going to take a hammer to everyone to cause another crisis. They never let a crisis go to waste. So these are the problems that I see out there that could cause this market rally to falter, because I still believe that we are in a bear market rally, that ultimately once we hit resistance, we're looking to short the Qs up at around 430 to 440, up into that resistance level. We'll talk about that more in a moment. Goldman turns bearish. That really means nothing to me. when I read a headline like that, it's usually my contrarian antenna go up, and I'm like, okay, I should get bullish. But they make a clear and defined statement here that I kind of agree with. Without clear signs of positive shift into macro momentum, meaning the economy, temporary re-risking could actually increase risk of another leg lower in the market rather than signal the end of a bear market. We've never had a blow off top on the VIX. We're going to go to that chart in a moment. I refuse to believe that we've seen the bottom in this sell-off. Economic data is only getting worse, and I'm teasing the chart. I'm going to say for last, but equity traders are not going to like it. Insiders are dumping the most stocks since January as retail panic buying reemerges. When you see retail investors move into the market, we were saying this back here. You got to watch out for a market top. And here we are. Look at this spike in retail investors. All the while, what's happening here is that you're seeing sellers dump. So you're seeing institutional distribution of their own shares. Retail investors are moving in. It's a contrarian indicator. Last thing, misery index. We're still in recessionary territory on the misery index. I was looking at this earlier. I was going to get ticked. I think this is printed by Fred. That's the Bureau of Labor and Statistics, I believe. And they did not put a blue bar here, which would define in current tense that we were in recession. But it looks like this last print was from back in February. So we were not in recession at that time, to be fair. Now, somebody asked earlier about gold. You know, ever since the Swiss and then the EU began raising rates, the dollar has floundered. It is now breaking down. And today, the pound crashed after Bank of England hikes most since 1995. So I'm kind of surprised that their pound didn't rally. Yields rallied up higher, but we're not the only game in town anymore. And that's the reason why the US dollar was so strong, is because we were the only country that was hiking rates, and you saw other economies seek safe haven in the US dollar. So that edge that we had over other countries is now gone, and we should expect to see gold. We'll go to that chart in a moment. Continue this rally up higher. We are very, very long in the gold mining stocks, and we're going to remain long. We're going to leave this off, and then we're going to go to the earnings trades with a reason why we need to get concerned. During Powell's last testimony, he stated that in September they were going to really ramp up the distribution of assets off of their balance sheet. Now, I've been very, very critical of the Federal Reserve because they did not live up to their June, July expected drop off in terms of dollar terms, the amount of debt off of their balance sheet. They certainly haven't lived up to their August decline of debt off of their balance sheet. But there is one trend that is going to take hold. I believe I mentioned this probably last Thursday, because that's when I go over the Fed chart for the Fed's balance sheet, because it's only released after the bell on Thursdays. The trend, folks, this is clearly a downtrend. As limp, as anemic as it is, the trend is clear and defined. It's down. And if this begins to see a rate of change which is increasing to the downside, watch out below for equities. Now, this is not reflected in Treasury yields as of yet. So keep an eye on this. This is a major, it's the right thing. It's the right thing to do, but it's not bullish for equities, because good news is bad news for equities. Let's go to earnings, and then we'll talk about the weekly charts. All right, so we did trades here, and I got to bring up my positions because we put on 3 trades on earnings. So if you think I'm looking at the camera, I am not. I'm looking at my positions. So we're going to begin with Twilio. What we did is we opened up a strangle position here. That means the simultaneous sale, not the purchase. We did not buy options. We sold the options. Same trade, all of these earnings reports that we're going to go over. Twilio, Square, Block, and what's the other one? Twilio, Square, Cloudflare. That's the other one. So Twilio, we opened up a strangle expiring tomorrow. We got roughly a 3 standard deviation price on it, meaning we took a very little risk on this, but we got paid very, very well. So we sold the 125 call options. Let's go to a 4-hour chart. That's right way up here. And we sold the 75 puts way down here. So we don't want movement, right? We're not option buyers. We don't want any movement whatsoever. Whereas option buyers, they want movement. They want a lot of volatility. We don't want that. So Twilio came out. They reported an adjusted loss of 43 cents per share. I haven't gone over these reports yet. Okay, Twilio EPS, 11 cents beats, 21 cents estimate, good. Sales beat. So they had a good earnings report. They missed on customer accounts slightly, but overall, a fairly good report. Flat non-GAAP loss, higher revenue. So this is a good report here. So this is one that'll probably expire worthless tomorrow. We'll just collect a premium on it and we'll book 100% profit. The other report that was released after hours was Block, keep doing that. And on this trade, same trade, we sold a strangle, meaning we collected a premium, 71 put side down here, right where I have these alerts set up, and to the call side right up here. So in all probability, we're not going to get tested tomorrow. This trade should turn out to be 100% trade because we're just going to let the options expire worthless. Their report, let's talk about it for a moment. Block 2Q adjusted EPS 18 cents, loss per share of 36 cents, revenues 4.4. So they beat EPS, sales missed. I put more. EPS can be manipulated. You have one-time occurrences, etc., tax advantages or disadvantages. They can manipulate earnings. One thing you can't manipulate are your sales. So I always put a lot more emphasis on sales than what I do on EPS. Now, their sales missed, and by a pretty significant amount. So the shares are down after hours. We'll take a look tomorrow to see how Square holds up. If we see Square bounce back, trade positive on the day on negative earnings news, it becomes a buy. That's a contrarian indicator. It's called a tell. So we'll watch out for Square for a possible long trade. But as far as our current trade, these options should expire worthless, which is bad for option buyers, great for us as option sellers. The last trade that we put on tonight was Cloudflare, and we only got a partial fill on this, a very small fill. I think it was a one-lot contract, and they had very strong numbers here. In fact, I want to probably buy the stock on any pullback. Let's get to it. I think they beat on top and the bottom line. They affirmed their EPS guidance, so that's good. They beat on sales. That's all I need to see. They beat on sales. That's good enough for me, and they beat by a healthy amount. So their price action right now in the after hours section is literally testing our 71 strike. So what we'll do tomorrow is either A, close out the trade, maybe take a small loss, maybe take a small profit. It depends. If implied volatility is still high tomorrow, what I may do is roll up the put side to the 71 strike and create a straddle. And we'll just collect the premium and we'll try to squeeze out a little bit of juice out of that lemon. But otherwise, we're looking very, very good from a profit perspective for tomorrow. I know Franklin is out there. I know he traded a couple of these, and he should be happy as well. All right, so let's get to the weekly charts, and we'll discuss how we think that we're closing out the new, or this, not new trading week, the trading week. And as I go over these charts, folks, I'm going to say this a few times. One trading day left to go. A lot can happen. Let's get to it. All right. So the 10-year yield has been very, very weak. I think that what we're seeing here is a bull flag setup, meaning I think we're setting up for another run up higher. Remember the chart I just showed you, the Federal Reserve's balance sheet rolling over ever so slightly, but rolling over. So if they want to sell bonds to foreign entities and not have the Federal Reserve buy those bonds to keep the debt coming off of their balance sheet, they're going to have to pay more yield. So I suspect that we're going to see a breakout here fairly soon on the 10-year yield. Now, some may be thinking, you're bullish on gold. Won't that adversely impact the price of gold? Well, if you go back to the chart of the 1970s into the early 80s, yields went up higher because the Federal Reserve was playing catch up with inflation. Gold was going up higher. Where was the dollar going? Lower. So you can have yields move up higher along with gold as long as the dollar's moving lower. And when you take a look at the US dollar, the dollar had a breakout point failure. These are all weekly charts, unless I say otherwise. We broke out 4 weeks ago, failed the week thereafter. So this is a pretty bearish setup. I think that we're probably going to move lower here. Again, we are not the only game in town in terms of major economies raising interest rates. And look at the volume. This is massive, massive distribution of the US dollar. As for Treasury inflation protected securities, they're down on the week, but what they're doing is they're digesting last week's gains. Think about this. We have a Federal Reserve which is raising rates, yet people are still, institutions, mostly institutions buy tips. Institutions are still stepping in and buying inflation protection. Why would they do that? These are sophisticated investors. Why would they do that if the Federal Reserve was really fighting inflation? They wouldn't. They're buying them because the Federal Reserve isn't fighting inflation. All they're doing is jawboning it down and playing with the federal government by trying to dump the price of oil, by flirting with the Saudis, dumping our strategic petroleum reserve, and trying to manipulate the markets ahead of the midterm elections. So the tip market is smart. They're going to sniff this out. We're down on the week, but all down weeks are not made equal. What I think that we're doing here is that we are retesting last week's breakout point, and we're holding. We're rallying off the lows of the session. One trading day left to go. Let's keep it going. The US dollar, we did that. Let's see how we closed out the day today, though. Daily chart. Broke support. Again, we did it back here, only to recapture here on the second. Now we failed again. Down volume is light today. Okay, the VIX, one of my favorite indicators. Dehydrated. Sorry about that. The VIX is up on the week, albeit well off the highs of the week. Now, this chart is a chart that haunts me. And the reason why it haunts me is simple. You can see here, I have this solid cup. And what this cup represents is a major, major base being built come on, you're embarrassing me here. Come on. All right. It's not. Let me change it. A major base is being built on the VIX. And if this doesn't work, I'm going to skip this. Yeah, forget it. We're building a right side of a major base on the VIX. And for those not familiar with what the VIX means, the VIX is the fear indicator. So if the VIX is moving up higher in general, the S&P 500 should be moving lower and vice versa. So the VIX, this is a very, very rock solid formation. And should we break out above a 37 handle on the VIX, you better be liquid. You better have a lot of liquidity in your account, because that's when you get these 1,000-point drops on the Dow Jones, just like that, day after day. I've been through this several times, these types of bubbles. So if you go back in time and you say, okay, what did the VIX look like over the past several bubbles? And we are in a bubble. It's a debt bubble. And the air is coming out. So if you go back in time and you take a look, 25 years. 2000, the post-2000 .com bust high on the VIX was 43.74. I think that's the lowest VIX reading since then. The financial crisis, God, I remember this son of a gun. We almost hit 90 on the VIX, folks. Think about it. COVID, we hit 85. This last sell-off of 2022, we haven't even seen a 40 handle on the VIX. That's why I believe that we are not done with this rally on the VIX and the sell-off on equities. Does that mean that the equity markets can't move up higher tomorrow? I fully expect that they will. Longer term, though, get ready, because it's going to get volatile. Let's take a look at the daily chart. How we closed today? Very weak. Bearish reversal bar. We closed just below support. Stokes rolling over MACD is like a coiled spring, man. So this could reverse at any time, folks. Moving on to the Dow Transports. The Dow Transports are doing, again, a retest. All down weeks are not made equal, right? So if by the end of business tomorrow on this weekly chart, we trade back down below this line in green, that's a breakdown, right? We had recaptured that real estate, this support level last week. If we fail to hold it this week, that's very, very bearish stuff. In all probability, we will continue lower. Right now, though, the markets are telling us, hey, we're bouncing off of the support level. So what was support back here is now support yet again. One trading day left to go. Daily chart. Now, as you proceed into the new trading day, we had broken down earlier in the week here on the 2nd, but we've recaptured support yet again. You do not want to see 14,400 not hold this week. Up volume decline sequentially. So a bit of a warning flag on the track for the transports. Maybe saying, why am I focusing so much on Dow Transports? The reason is that the Dow Transports are a canary in the coal mine for equities, as go the transports. In general, go so the rest of the equity markets. Hey, Yoga Mac, don't be mad at yourself. I just used all down weeks are not made equal twice, and you missed it. Can't believe that. Don't beat yourself up. There's always a replay. Good to have you here, pal. All right, so that's the transports, a leading indicator for equities. The Dow Jones Industrial Average, we're right at resistance level. We did not have a clean breakout last week. We're right at resistance. A strong day tomorrow would set the stage for a strong week next week. Daily view. We're consolidating here. Fridays are generally a bullish day, so we could easily see a continuation move up higher on the Dow Jones. S&Ps, We have broken out. We broke out last week. It did a retest this week, and we have a continuation move up higher. This is very bullish, unless, of course, we sell off tomorrow. So S&P is looking really good. Daily view. First off, before we close it out, let's go to, all right, so this is a problem here. Watch the volume. Volume is light. Daily view. Wrong chart. Consolidating. I think we're going to move up higher. I think we're moving up higher. Triple Qs. So this is what we're looking to short. Not now. By no means not now. And the basis for our short is sure to make money, but the true basis of our short of the Qs is to act as a safety net. Because I don't want to not trade options or equities. But if the bottom falls out of this market while I have large positions on, I want an insurance policy immediately below that'll pay off. So what we're looking for here is ideally the triple Qs heading up here to 340. We closed out the day today at 324. So it's a good ways away, but the longer we wait to get up into resistance to put on that trade, the greater the probability of us making that trade and it becoming profitable. And the closer we get to that 340 mark on the triple Q, the more liquid I'm going to be. Meaning I'm not going to be as aggressive because I know what's going to happen once we get up and above 340. All these sellers up here want their money back. It's overhead supply. There's zombies up there. All they're looking for are the triple Qs to go green again on the trading platform. They're going to click the sell button and they are out. They don't want to make money. It's psychology. So I fear that once we hit this resistance level, that's when we're going to run into all sorts of shenanigans, and this market could quite very well roll over and take the next leg down. And watch the volume. VXX, that's a ETF putting you long of the VIX, is still acting weird. It's correlating with the VIX. Yes, I agree. It's been very weird. Some days you have the S&P 500 up. In fact, case in point, let's go to it. And I think this is what Yoga Mac is talking about, is that we see this constantly now, either on a daily time frame or a weekly time frame. You take a look at the VIX weekly chart, it's up a half percentage point. Then you go to the S&P 500 weekly chart, it's up a half percentage point. What's that all about? And it's not just a one-off. This has been happening over and over and over again over the past several weeks. So Yoga Mac, I think that is what you're referencing. If not, please let me know, and we will. What did you write? I'm still a greenhorn. Okay. Greenhorns are welcome. Everybody's welcome here, especially the females. Way too much testosterone. Females, if you're out there, let it be known that you're here. We don't want to be charged with toxic masculinity. We want estrogen here. Estrogen is welcome. All right. So back to the triple Qs. We are looking for a 340 handle. If I see wonkiness in the market, if I see us begin to shudder a little bit and it causes me a little bit of grief, we'll dollar cost average into our short of the triple Qs, and we will be buying options. And I'm not talking about options that expire next month, not even next quarter. I'm talking about I'm looking right now at the June 2023 put options on the triple Qs. That's how far out I want to go. It doesn't. Okay, so yeah, we're on the same page. Gotcha. Yep. Okay, moving on. The banks. Inside week. I think they continue up higher here. Nice breakout on Stokes. Bullish on the banks. Let's take a quick peek at the daily chart. I was looking at BlackRock. We traded earnings on them earlier in the quarter. This is our first earnings trade of the quarter. We did well. And BlackRock, big breakout. Let's take a look at it for those that are looking for a bank to buy. Come on. Come on, Bob. You can do it. There we go. Look at the breakout on the week. One trading day left to go, but right now BlackRock is looking the bomb. Very liberal. World Economic Forum CEO. So I would not personally invest in this, but if you are apolitical, then by all means, go for it. Uh, Technology, big breakout on the week, one trading day left to go. And what is interesting about this chart and noteworthy is that what we've done here is we've broken out above resistance in two respects. One, the upper band of the declining downtrend channel. If we close above this mark this week, I had to adjust this line up here because that becomes our new upper band of resistance. So right now we'll keep it up here, one trading day left to go. And here is our lower band of support. So if we fail and we roll over, you could see how much further we can go down before tapping this lower band of support yet again. I'm not predicting that's going to happen just yet. I think there's more fuel in the tank here, unless of course, one of the problems that I mentioned early on in the broadcast comes true. Taiwan, major problem. Chinese lockdowns, supply chain problem. The morons in Washington are just being intellectually dishonest and lying. They're saying it's different now. It's never different now. Once they deviate from the norm, that's when things get real fast, and you do not want that. Anytime in my trading career, when I've ever heard it's different this time, it never has worked out well. So that's technology. Semis, looking the bomb. Also a breakout here. Very strong price action. But take note of volume. Volume is dropping off sequentially. Let's go to a daily view. Resistance immediately above at 247. Beware. LABU, we are long of LABU. And some may be thinking, it's come so far, so fast. It's more than doubled in the past several weeks. No, this is just beginning. We have an outside reversal bar, also known as a bullish engulfing. This candlestick is also a bullish key reversal. Not familiar with what those terms mean? Link below to my top 5 favorite candlestick patterns. It's free. 5-part video tutorial. Take advantage of it. So it looks as though, should we close out the week? By the way, LAB is a leveraged ETF putting you along with the biotechs. Not for the faint of heart in terms of volatility. If we close out the week this strong, this is a major breakout on LABU. Next stop around 1150 per share. And I think that's what Lewis was referencing earlier today. Energy. This is a sign of economic contraction. We don't need for the Federal Reserve to tell us we're in recession. All we need to do is take a look at the yield curve and sectors that are levered to a economy that is contracting. And this chart here is clearly saying we are now in a downtrend. The only thing that could save us right now is if we rally back and break out above this upper band of resistance. Right now, we have a lower high and we have lower lows. Energy is in a lot of trouble. In fact, if you take a look at, do I have oil up here? If you take a look at oil is down over 10% on the week. The correlation between energy and oil is lockstep. If oil is going down, energy is going down. Right now, it looks as though energy is going to go down further, and so goes the energy stocks. Avoid them. Now, this decline in energy is going to allow equities to move up higher. Why? Why would that be? The reason is that, remember, the Federal Reserve, they pretend they don't look at the core CPI. They do. And while oil technically is not in that core number, it really is. Because remember, oil goes into a lot of input costs of companies that are in the core CPI number. So if their input costs are going up, well, their prices need to go up. So I think that this next CPI number for July, which is coming out soon, it's going to come in as a decline. That will allow equities to rally. It'll also allow gold to rally. Why? The Federal Reserve doesn't need to be as aggressive on interest rates. Staples, looks like we've hit a resistance level here. We've backed off. Wait for a breakout. Do not go buying staple stocks right now. Discretionary names, we have broken out on the week. Even though the consumer is tapped, we have broken out. Let's go to a daily chart here. It's a good looking chart. A lot of resistance above here. A lot. Bitcoin, let's refresh. It's still trading. Wow, it's getting a hit. Daily chart. I don't know. To me, this is a bullish setup. Where people see negativity, I'm seeing opportunity. I think that this is going to get resolved to the upside. You can see there's a lot of sellers above, but this is an orderly pullback, and this will probably get resolved to the upside. So while the weekly chart of Bitcoin is not looking all that good, I think that in all probability, Bitcoin is going to shrug this off and move up higher. Now, emerging markets. All right, this is EDC. 30% of it is mainland China. So if these shenanigans keep going on in the Taiwan Straits with China, and they keep having these lockdowns over in China, I'm going to have to avoid this trade, or at least stay very, very small. But the stars are in alignment for this trade, and our game plan here is to buy what you call a bull spread, a debit bull spread. What does that mean? It means I want to buy a deep in the money call option, and simultaneously I want to sell a deep out of the money call option going out a year. And that sale of the option will help finance the purchase of the option. So we like the setup here because we've broken out on a weekly chart. Our momentum indicators are now putting in higher lows. And when you go to the volume is not good. When you go to a daily chart, here's where things get really, really nice. RSI rising, Stokes higher low. Folks, we broke out yesterday on a daily time frame. So let's add this all up. Weekly breakout, daily breakout. We know emerging markets trade inversely of the US dollar, meaning when the dollar goes down, emerging markets go up. Well, what's the dollar doing? The dollar's weakening. What's that good for? Emerging markets, gold, commodities. So EDC, I want to pull the trigger because it's a perfect timing right now, but I'm just a little bit worried. Gasoline prices collapsing. This will also allow equities to rally. Now, the first week we get a reversal week on gasoline. Big gap down. Wow. Big gap down daily time frame. We were down what? 12% on the day. Wow. Amazing. The minute we get a reversal of this trend and we begin to move back up, watch out for equities. Equities are going to shudder, thinking that the Federal Reserve is going to have to raise rates. Dollar will strengthen. We will be out of gold. Speaking of gold, monthly chart. Last month, and this is what I always like to say, all down weeks, all down months, all down days are not made equal. Last month was a down month, but it was bullish. Why was it bullish? It's bullish from a technician's perspective because we rallied off of historical support to close above another support level. That is a major, major tell. What are we doing this month? We have retested support and it's held. And we are now up on the month. We're looking for a continuation breakout on gold. It could happen as soon as tomorrow. RSI hooking up higher with a hockey stick, looking good. Stokes still declining down below 50. Warning flag on the track. Month is early. A lot can happen here. Ultimate oscillator hooking up. Weekly view, gold. A beautiful 3-week sequence of up weeks. The problem is that volume is not following suit. Ideally, you have rising sequential up volume. We don't have that. So while we're long of gold, we're long of silver, we're long of the gold mining stocks, we don't carry water for anyone here. We speak not our book. We speak the truth. That's why you guys tune in, for honesty and not for what our advertisers want us to say, any of that nonsense, or the government. Nobody pressures us. So we are long of gold. We want it to go up. I would love everybody to go out there and buy gold. But while the price action is looking great, I'm worried about the volume action daily view. You know what? If I could ask you to take a pause here, hit the subscribe button, like, comment, I'd appreciate it. Thank you very much. I'm proud of myself for remembering that. You guys usually remind me to do that. All right, gold daily chart. Really, really, really nice price action today. Really nice. What were we up today? Nearly 1.75%. Volume light. That's the rub. So gold looking good. As for gold mining stocks, this is our GDXJ. We're right at weekly resistance. We're doing very well on the week, up nearly 1.33%. Our leveraged ETF of the major miners, not the junior miners, NUGT, we're up 1.16%. We have a breakout. Actually, we broke out last week. We have a successful retest this week, and we are now positive with a new weekly higher high. Knock wood. Franklin, I know you're out there. We talked about this earlier. Hopefully, we close above that mark. Silver, down on the week. Let's go to a daily view. Nice update today. We were up over 1.33%. The silver miners had a rip-roaring day today. This is a weekly view. We're up 1% here, a little bit more. Now, on a daily time frame, we're up over 4.5% here on the day. Really awesome price action. So the gold trade looks very, very solid, and we will be sticking with it as long as the U.S. dollar remains weak. Yields can go up higher. Yields could trade sideways with the bias of the upside. That's okay. I just watch the U.S. dollar. Dollar goes up, we got to get out of gold. All right, let's take some chart requests. Folks, this is going to be brought to you by our sponsors over at TrendSpider. If you are not currently using TrendSpider, you're missing an arrow in your quiver. For years, institutional investors have had this technology, and now TrendSpider's made it affordable for the average guy. So what I like about it, the reason why I got involved with Tesla, because I have the chart up here, with TrendSpider, I met the management back in 2017, and we met at the stock the annual convention of the stock market in Madison Square Garden. Actually, no, it was it wasn't. I'm sorry, that wasn't it. That's where I met Tom Sosnoff of Tasty Trade. I met them at the CMT, the Chartered Market Technicians Convention in 2017, and I liked their product due to the fact that you have multi-time frame analysis. What did I just do on the other charts I just went over? Weekly charts, monthly charts, daily charts. They all play a role with each other when you try to make a decision about what to do. And when they showed me the functionality, they've added so much more since then. But when they showed me the functionality, it just rang a bell. The ability to be on a, say, weekly chart and have the power to do an overlay on top of a weekly chart, a monthly chart, is so powerful. It's so powerful. It's a time saver. And the ability to use automated trend lines is also very, very powerful. Like up here, I pop them off, put them back on. in red, green, 3 support levels immediately like that with 1 major resistance level far above. So this is powerful stuff. It allows me to do what we're doing tonight, to scroll through charts like this and pretty efficiently. So 35% discount code below. Take advantage of them. They have seasonality, back testing, scanners. You don't need to build the scanners. They're built for you. So take advantage of it. 35% discount code below. Let's get to it. Let's begin with, all right, we have the man himself, Lewis. LABU for Lewis. Here he is. Let's give him a shout out. Lewis, how's Sherry been? I haven't heard from her. All right, so automatically, folks, for those of you that have never seen this chart before, those are my drawings I just took off. You pop this up, automatically you get this. You click the button. Hey, where's my support and resistance on LABU? Okay, click a button. Oh, look at all this. Look at all this. Automatic. We broke out today. So I suspect that we're going to retest of support tomorrow. We could add more by the end of business, assuming that we hold it. But we want to know if we break through, touch, bounce, and we're good to go. Our alert is set. It is up here. And in fact, what I want to do, I want to check out seasonality. There may not be enough data here. Seasonality, folks, yeah, it's not enough data. It only goes back 6 years. So we're going to skip seasonality here. You could do seasonality by the month, by the week of the year. We are here, up 57% of the time. Next week is not a good week. 0 up weeks next week over the past 6 years. And the best day of the week, you got to narrow this down. Say over the past year, Fridays are up 52% of the time over the past year. Actually, since year to date, calendar year 2022. So powerful stuff. So LABU looking good here. Our alert is set. I think we can move higher. And we will have resistance up here at about $11 to $11.50. Right here, the line in green. So if you want to scale out of your position up there, take some off. It makes complete sense. Expect a pullback and a retest back down to $11 a share. Reload back down there. Let's take a quick peek at a weekly chart. How are we poised to close out the week? Let's take off the monthly resistance levels. We're poised for a major breakout here on LABU. For full disclosure, we are long at the contrarian trader of LABU. So are several of our members. So just be forewarned. Nugget, we went over. We'll skip on that. Lewis, we'll go to Boyle. I'm very surprised to see Boyle up. We do have some topping action on the week, but we did bounce off of this VWAP, which is connecting prior lows, and it's holding. Stokes are rising on the week. Would I buy it here? Probably not. Where would I buy it? Probably on a breakout. Actually, you could buy it here. You could buy it here. Just use a stop right below 72.78. That's critical support. So I would stay small here, add more in a breakout. We're probably going to be in a trading range for the next several weeks on Boyle. I see no major rush to get involved here. We could retest the support level multiple times. No reason to get long right now. You can. I don't see a lot of danger, but I see a better setup by waiting. I don't think it's breaking out. I don't think it's breaking down anytime soon. Now, on a daily time frame, good setup here. We may be breaking out soon. But between this breakout here And where you have massive resistance, it's not worth the trade. It's a bad setup. So I would wait for a retest of that 77 mark, 77.50, 77.70, and look to get involved there. Then add more on a breakout, going back to the weekly chart to keep it clean above this upper band of resistance. That's Boyle. Mosaic. Mosaic just reported earnings. Weekly chart looking very good here. We broke out last week, retest this week. We held. It's a down week. All down weeks are not made equal. We rallied off the lows of the week. We are above support. I'm liking the weekly chart, even though we are down. Stokes going in the right direction. Daily view. We're holding, I believe this is the 20 period, that's 50 period moving average. We're holding it. We have a volume shelf immediately below, right here. It's acting as support at $52 a share. As long as we hold $52, where do we close? Actually, we're right below it. We're right below it. I would wait for a close above $52 a share before pulling the trigger on Mosaic. Otherwise, I like it. What else do we have here? We did gold. So, Clark, you're good. NEM, Newmont, they reported earnings. Earnings were not wonderful. So while you have the gold mining stocks that are up on the week, NEM is a laggard. We hate laggards, except for this. What we do here at the Contrarian Trader is we try to find opportunity in the ashes. And earlier in the week, we identified that Newmont Mining had very expensive options. What do you define as expensive? How do I define that? Simple. You take a look at what the current historic IV percentile means. It is. IV is implied volatility. Basically a measure of how much fear is in the stock. The higher the fear, the more the expensive the options. So any read above 50 signals an expensive option. Right now, Newmont is sporting a 65 handle on implied volatility. Great for option sellers because we can get far away on strike, get paid a lot of money for premium, and ideally they expire worthless. So what I see here is an opportunity is to do a few things, really. You could simply sell naked puts, or you could open up a strangle, or you can open up a straddle. A strangle is a simultaneous sale of a deep out of the money call, deep out of the money put, same expiration date. A straddle, you only want to do this, a straddle with a high implied volatility. You have that. The sale of a at the money option, in this case here, we closed today out at 45. That's a simultaneous sale of a 45 put and a 45 call. You generate a credit. You're going to have to close that position out at some point in time. So you look for a profit range of 25 to 35%, close out the trade. On a strangle, you're looking for 50% profit margin, bare minimum, and you close out the trade. Unless you're so far out of the money, you just let them expire worthless. So that's what I would do with Newmont right here, right now. Would I buy it? No, I already own gold mining ETFs, so I have no reason to. What do I like it from an options trading perspective? Yes, I do. I like the week so far. Yes, we're down. All down weeks are not made equal. Why? This is a doji star formation. This is a sign of indecision, a sign that this trend is about to come to an end. But it's going to take a little bit of consolidation. So I think you can do some options trades here. It's ripe. It's nice. And this doji star formation is a sign, again, of indecision, and it will probably see a trend reversal in the next week or so. Daily chart. Nice correlation here. Take a crayon out. Do we have a breakout? They tried to. No breakout yet. Again, I wouldn't be. You can buy it here if you're not in gold stocks right now and you're looking to buy Newmont because you like Newmont. That's fine. Buy it. Stay small. Use a stop loss right below this automated trend line. I didn't draw this. That's the algorithm telling me there's support below and you have a lot of resistance immediately above here. Great options trade, though. She is good. Please tell her I said hello. And she's missed. We love the estrogen. We love the female component. RIVN. Didn't they announce a bunch of layoffs? Did I not? RVN? What's the symbol there? Why is this not working? Did it log me out? Yeah, they're logging me out. I got to log back in. This happens from time to time. All right, that's better. Okay, there we go. The weekly chart's looking great. I like it. Let's go to the monthly view. Well, there's not a lot of data here, so monthly view is not going to help. Nah, forget the monthly. I like the weekly setup. We're done going down. We're now inching back up. Daily view. Nice setup here. Really, really nice. This is one where you could also trade the options. I would not chase this stock. It's got a lot of problems. It doesn't trade options. So I would avoid this. Otherwise, if you're going to trade it, I would trade it on a new closing high above yesterday, August the 3rd, and use a tight trailing stop loss order. This company's got a lot of headline risk. Seems like every day I open up the newspaper and there's something else going on there. So just be careful. Rivian looking good. I think it's done going down. All right, folks. Thank you for being here. Thank you very, very much. Hold on. Suggest selling 916 puts on Boyle. Was that Lewis? Hi, Bob. I'd like to share that I recently just got a promotion to social media manager at my job. It occurred to me after the first day that I didn't have to immediately get a shower after work. I could use you if you're not joking. Send me an email. I need a social media manager. I suck at it. How about a round trip field to some of the EV plants? I have one in my area. I'll get it, take some pictures, and see. Sounds good. Yeah, definitely. We'll give you credit for the editorial work, not the editorial work, the investigative work. Pete, thank you for that. August 11th, Rivian earnings. So, Pete, thank you for that. Always good information to have. All right, folks. Thank you for being here. It's my honor. Click like, subscribe, and leave a comment. Share with a friend. And I will talk to you folks on Sunday night. Members, I'll talk to you tomorrow. Everybody, thank you for being here and be well.